What's up, my peeps? How you guys doing? Happy Easter. And I just finished a very long notes on an interview on a very important issue that is becoming raising awareness in the world, and it has to do with Bitcoin. And so this is Tuck Notes, beginner crypt thoughts talks. I think I said it right. So here it goes. So this is going to be a longer video, but it's packed with very important information, and I highly recommend that you watch this video throughout the entirety. But that's, up to you. I'm just the messenger. I'm here to help us. So, title is If Bitcoin Crashes, and pardon me, I'm going to tell you ahead of time, if my eyes glance down and I'm reading, it's just because I just did this and my brain's just washed, and I'm new. I'm a beginner at this stuff, so just please bear with me, okay? If Bitcoin crashes, it's because of what? ... So this is an interview with a man named Dr. Julian Hosp, H-O-S-P. He's from Austria, and he was a medical doctor in his beginning career, and then he decided to just change fields and do something different, more business side likewise, and he started studying blockchain 10 years ago. And so he's pretty well informed about what's going on in the world on the cryptocurrency side. But he's not like a cryptographer. There are cryptographers. But this guy definitely knows what's up, because I wouldn't be making this video, right? Right. So if Bitcoin crashes, it's because of, all right. First, Dr. Hosp, Bitcoin, this is an interview from Chicken Genius Singapore, and he interviewed him. So these are the questions that he asked, and then these are the responses that he said. So the question was, well, what is Bitcoin's price target in 10 years, and what is it right now? And so right off the bat, Bitcoin's price target this year, he says it's $200,000. And in 10 years, it will be 500,000. And how did he get these numbers? It's based, the long-term goal in his 500K is based off of the price of physical gold. He wrote a book back in 2016, Dr. Hosp, called Cryptocurrency Explained Simply. And you know who read that book? Elon Musk. There's a picture in the video of him with the book in his hand. I'm sure he read it. And so that's said something. He said, instead of looking at physical gold, he thought of it as digital assets. Dr. Hosp doesn't see more upside to Bitcoin other than regulations and inflations, especially with all the money printing. And if Bitcoin moves from digital gold to an actual currency, well, yeah, I guess that's a question too. If Bitcoin moves from digital gold to an actual currency, there are people that are optimistic. This is like a what if question, I guess. There are people that are optimistic. Where did I leave off? There's too many words. But still, 500,000 in 10 years is his price target for Bitcoin. So next question is, what about this? Where do you see Bitcoin? Well, okay, he says his response. And pardon me if this is kind of out of order, but I'm doing my best. Bitcoin's going to go to 200K. And then there's going to, this year is the hype cycle, okay? Just like we had last year with Tesla with the hype cycle, going up to 2,500. So that's why we could see Bitcoin going up more. That's why he's saying 200K. So we could see it going up to 200K and then a correction, which means it could go down. And then it could speed up again, obviously, but the hype cycle will not be as pointy on the graphs. If you look at the graphs, you'll understand what I'm talking about. So in Singapore, Chicken Genius was like, so you mean it's like can go up to 100,000 and then 70,000 and then 50,000 and then, so like basically he's like, yeah, it moves 20% to the up or to the down. There's like real technical, and I'm learning now a quantum, I don't actually know what quantum physics is, but it gets very technical. And you can get technical or you can just kind of ride the boat. And so, that's his 20%. And I told you Ethereum was 2%. So these are all based off of percentages. And that's how you can figure out and start figuring out how to make money off of these currencies or assets. If it hit 100K this year, would you sell your Bitcoins? And he said, no. If regulation would step up and move and institutions started selling off their Bitcoins. Oh, wait a second, I'm sorry. If it hit 100K this year, would you see selling your Bitcoins? And then he said no. However, if regulation would step up and more institutions started selling off, he would, sell his Bitcoins. Kind of makes sense. But right now, Dr. Hosp is let on 200K. However, if something changed, like suddenly he started seeing institutions buying more, then that would be a reason to, buy more. And we're going to get into two different vocabulary terms. Right now, I'm going to explain to you proof of work versus proof of stake. What is proof of work? Proof of work, Bitcoin is doing a lot of calculations, whereas proof of stake is using Ethereum, Polkadot, Cardano. So the question that Chicken Genius Singapore asks, so is proof of work dead, right? Is it dead? Is Bitcoin doing a lot of those calculations? I'm going to get, this will make more sense as I go into this. The fundamental question is, what is a vote and who has the right to a vote? Just go with me. In a decentralized system, it's much harder, so you have to submit proof of like on your electrical bill or your ID, or if you want to look up money. That doesn't make sense, but basically, yeah, you need to show identification that you are you. I am Tucker talking to everybody. On DeFi chain, it's proof of stake, but proof of work is not dead. There's massive value in proof of work. And that's why on DeFi chain, it's proof of stake, but proof of work is not dead. There's massive value. Proof of stake could be more scalable. It's the biggest challenge. The biggest challenge is security in a decentralized world. Government attacks would be much better on a proof of stake because it's harder. It's harder to do. They would have to literally buy all the coins to have control. It's a lot of money. Is Bitcoin quantum proof? Does Tucker know what quantum proof means? No, I don't. I'm a beginner, but I'm learning right now. So we're gonna learn together. Quantum risk. Talk about cryptography. Okay, so in cryptography, quantum risks talk about cryptography. And in the Bitcoin, there's two types of this. I'm doing my best job right now. There's an elliptical curve, how your public key and your private key are generated. It's the form of the internet. It's the form of the internet. This is vulnerable to quantum computers. What I'm about to say is very important of the entire discussion. This is the meat and potatoes, I believe. I'll do it. This is vulnerable to quantum computers, so this needs to be updated. Okay. Hash functions go from public key to your Bitcoin address. It's very relevant. Why? Because also hash functions are used for the mining. Hash functions, from our today's perspective or our understanding, are not vulnerable to quantum computers. This idea that Google or the government or somebody else can come and outmine everyone is absolutely not correct. But you could say they're just trying to hide this from you. Or now you could say, oh, they're just trying to hide from you. Now today's facts, every cryptographer will tell you that hashing algorithms are not vulnerable to quantum computers, but the private key and public keys are. But they need to upgrade. Okay? Now, however, we are skeptics. I'm skeptical about a lot of things. And so if you're skeptical, however, and you don't trust the government, Google, or the NSA, and you think they could steal this from you, then here's a trick. This is cool. Where you're 100% secure. This is a trick where you're 100% secure from quantum computers. Okay? You send it is your currency, to a fresh address. Nothing comes out from it, meaning there's been no transactions. You send it to a fresh address, okay, with no withdrawals, because not quantum computers can go from the address to the public key. It's actually impossible for quantum computers to try to attack that, because they don't know where to start, because because they cannot go from an address to a public key. It's only when you make that transaction, it's only when you make that a transaction and it's out is the first time you reveal your public key, and then it's vulnerable to being attacked. So if you don't trust this, Dr. Hosp keeps his Bitcoins on a fresh address. So so if you make a small transaction or anything, because he's super paranoid, what does he say? So if he makes a small transaction, I clear the old one and I send it to a new address, just to be 100% clear. It's a way to attack, 0% of ways to get attacked. The only issue is you need to update the Bitcoin key to private, or Bitcoin keys to private, to public. Let me see. The only issue is if you need to update Bitcoin keys to private, public. Oh, you're not, okay, so this is what it's saying. Basically, you're not going to see anything change until it'll happen sometime in the 2020s to the 2030s. You'll start seeing more of what I just was mentioning about, they'll be catching on. Basically, they'll be catching on, but it's not for a while. That's more simple terms. Let's bring it a notch lower. And so, where are we? The question becomes, how dangerous is Bitcoin to whoever owns that quantum computer, right? The CEO of MicroStrategy, ticker symbol MSTR, I did a video on that. You can check it out. Great stock, but volatile as whatever. MicroStrategy, CEO of MicroStrategy thinks, he thinks the question becomes, how dangerous will Bitcoin become to whoever owns that quantum computer? And the CEO of MicroStrategy thinks, which is, he says, if a person who owns that, so like basically the person that owns that quantum computer is really like gonna go attack the government, the NSA. Maybe Bitcoin doesn't, I can't read my writing, make central banks, whatever. We're going to the next subject. I know this is difficult, and I'm sorry, you guys, I'm doing my best right now. Government will shut down Bitcoin. Will the government shut down Bitcoin? Regulations will come. The government will step it up with them. There will be taxation. There will be an extra incentives for you to actually sell your Bitcoins. Dr. Hosp on YouTube, he made a video called "You Will Probably Sell Your Bitcoins." Okay? The reason is, the more popular Bitcoin comes, the more we have to understand that the government cannot ban Bitcoin. That means banning numbers. All right? But the government can completely regulate Bitcoin. They can tax Bitcoin. To Dr. Hosp, he thinks it is a very serious risk, and I do too, now that I'm kind of understanding it. At the like MicroStrategy and Tesla, Bitcoin is on their balance sheet, right? And what if the government wants to put extra regulations on those companies because they have Bitcoin? Everyone is all, all allowed to own Bitcoin, but if you're going to put it on your balance sheet, you're gonna have to go through like 60 extra hoops, and that's totally fine. Suddenly, the boards might say, you know what, you know what, Elon, we know you like your Bitcoins, and we know you like to control people on Twitter, but you have to sell your Bitcoins now. That to Dr. Hosp is a real risk, and especially on the price, because there is a possible downward pressure. Dr. Hosp doesn't see this in the next 6 months, but he's, like I was saying earlier, he does seem to think this will happen in between 2020 and 2030. That's a more realistic approach, in his opinion. Chicken Genius' response was, I thought it's better for the network. What did you say? I thought by having regulations on Bitcoin is better for the network itself, because it's being regulated right now. People feel safe. The government allows you to transact more on Bitcoin. Many investors like Facebook, or industries, sorry, many industries like Facebook, if they could be regulated, they would love that. So there would be no competition going on. I know this is a lot of stuff, but I know it's a long video too. Regulation, by the word, is that means it rules. If you have no rules and want some rules, that's fine. But if you can have a way, but you can have way too many rules, and suddenly it becomes bulked out, and again, it gets bulked out, and again, not about regulation. Yeah, bulked out, and not about regulation or irregulation. This is not a black and white situation. It's a gray area, and that's where that is on the scale. I don't know. We could see regulations where we have to jump through 300 loops. For example, Singapore. That's why Dr. Hosp came there. That's why he's staying there. He thinks Singapore is a great place to start. They protect their customers. They're cutting down on the money laundering, and at some time they are going to give I don't know, they're going to give some, cutting down money from freedom as company. On the other hand, the jurisdictions are the other way around. No one wants to open their business. I don't want to jump through 600 loops just to get something. So the grayscale is the key thing right here. I know that was a horrible job doing that, but whatever. Chicken says a lot of companies like to set up their companies here in Singapore because it's open space, and there's more funds to come in. It's well respected, and again, you need to protect the customers, but at the same time, you cannot over-regulate the business. Otherwise, no one wants to do it, right? So there's no spot or place to do it. Dr. Hosp could explain two things he doesn't like about it here, but then there's 10 other things he could say that it's great about doing his transactions and fees in Singapore regarding Bitcoin. You know, there's always a give and take. You never can get, you know, everything perfect, right? So he said, you're not a tree, so if you don't like it, move. Can Bitcoin be cloned? Yes. So the codes get cloned all the time. It's called forked. All it is a database to get cloned, copied your data, to get cloned, copy your database from that point forward. Have a different set of rules going forward. That clone happens all the time. We have various Bitcoin forks. What you can not fork is the network. That's actually the value. So the actual value is the function of three things. Value, one, utility of something, the number of people who believe in that utility, and how scarce that utility is. That's any value that has any value in the world. We're almost done. If you go into the stocks value, the utility size is the cash flow. How many people believe in that? And how scarce is that? Super simple. I'm sorry for looking down and reading at this, but there's no way I can do both at the same time. Super simple. In Bitcoin, the value or the time utility comes from the store of value. How good is it at digital gold? It's very subjective to how good it is. The scarcity is easy to calculate because it's mathematically defined. So we as investors, from a very rational point of view, have used as the main metric to understand the value is the stock to flow model. You can Google that. Meaning, how scarce is Bitcoin? But a focus on how big is the network. The many people are in it. That's the main value factor for Bitcoin, in Dr. Hosp's opinion. You can fork Bitcoin all day long, but it's impossible to clone people, i.e., how difficult is it to set up a network like Facebook? It's not that hard at all. Like, we both can do this. But that still doesn't make your website worth $100 billion. It's because of Facebook having billions of people in the network. That's what makes it. I know that's kind of like a duh, but whatever. So his response, Chicken Genius, is that's the best way of putting Bitcoin. You cannot clone the network. We have Bitcoin Cash and many other forks coming out, but in the end of it, Bitcoin is still better, and it's where the smart money is at right now for the network. I hope you got that. Dr. Hoff is also, the next question is also, it's also why I would, if someone said, should I put money in cryptocurrency? I'd say, put it in Bitcoin. Why? Because Bitcoin is by far the only blockchain that has a finished product. It doesn't need 60 more upgrades. It's finished. It has the utility. It has a clear mathematical model. All it needs is more people. That's it. More people. That's why institutional investors, That's why institutional investors, yes, Ethereum might have more utility, might be more exciting, but it also has more uncertainties, more complicated. So if you're a new investor, put your money into Bitcoin. I lost a lot of money on Ethereum. I'll tell you guys that, trying to figure that one out. It's hard. Only go into the altcoins, only go into altcoins if you really know what you're doing, okay? Now, is there more institutional investors coming? I think the more and more institutional investors will be coming as we begin to understand, as they begin to understand that that's been discussed so far as in this video, everything I said before. All that matters is how many people are actually in this. Value is subjective. They understand more millennials are catching on, more and more people are catching on and saying, you know, screw physical gold, I want digital gold. This is where the wealth, there is a wealth transfer from older people to younger people, and that's normal process, okay? So when the money is going, so where is the money going to go? It's going to go into new censorship resistant digital decentralized assets. It's inevitable. Next one, Bitcoin as a currency, question mark. I think it will fail as a currency because you cannot buy your everyday goods as a currency, but I look at it as stock value. Next question, why do people keep talking about Bitcoin failing as a currency? Hosp says it's a naming value. They should have called it crypto assets a long time ago. It would have been much easier for people to understand. You know, to understand the Bitcoin, which is digital gold, which started in the dark market, where it originally was called currency. If it was actually called crypto asset, two things could have happened. First, the price of Bitcoin could have exploded. The first on the call, the crypto asset, what the hell am I saying? First, it would explode, and then the other one don't talk about Bitcoins because then the other people don't talk about Bitcoins. 55,000 is 55, well, at the time of the movie, it was $55,000 today. People have this unit prejudice that the more expensive a unit is, the more they think it's not attractive to the investor or to invest into it. So what do you have to talk about is how much is a milli Bitcoin? How much is a milli Bitcoin? We don't have that yet. So people say, oh, it's $55. Oh, it's cheap. You know, I could totally buy that. So if they made a smaller size Bitcoin. Next question, in the real world, we could have stock splits. Can this happen with Bitcoin? And the answer is yes. Mathematically, you can have a split. 10 to the power of 8 units is called a Satoshi. Satoshi is harder because suddenly we're talking about basically a Doji coin. And lots of milli Bitcoins would be a good idea. as soon as coin market cap would list milli bitcoins MBTC, the price would just double or triple. So Bitcoin's biggest risks. All right. I hope that the central banks would start pegging their currency to gold. I'm not married to Bitcoin. I invest in many things: stocks, Bitcoin, physical gold. That's not me. I'm talking on behalf of him. To me, I care about what the best value transfer from my wealth into the future is. That's all I care about. If a central bank would finally stop printing money and come to see that and say, come to their sense, you know where this is going, you know what we're going to start pegging to gold. And I'm not explaining this at all. Well, let's get down to something else. However, if the fact changes my mind, my opinions change. And that's normal too. And I'm sorry I had a long video. Regulations is the most likely risk. Regulations, taxations, unrealized tax wealth. Suddenly you have tax unrealized Bitcoin gains. Just imagine there's a 10% unrealized tax. Suddenly, so much selling's going on. So does the owner regulate the U.S.? Does the owner regulate U.S. wallets? Yes, but you see it now only in the U.S., but you see it in the U.S., Singapore, and Europe, and other parts of the world. And Dr. Hosp says that's not the catastrophe for the price. It just puts pressure on the price. Now, if we talked about a real black swan, which I'm not sure what that is, but something that's difficult to the percentage wise, COINBASE mentioned in their IPO filing, they talked about one of the biggest risks that's not calculable is a milliline Satoshi, which is basically a milliline founder, the person that no one knows who it is, but it's a person or a group that owns about 1 million to 2 million Bitcoins. And if that person is rogue and they start selling pressure the market, oh my God, I can't read. But if that person owns 200 million Bitcoins, and if he goes rogue and he starts selling, you're gonna basically the pressure, the market, the 1.5 million Bitcoins, that creates a lot of price pressure. So you mean there is a person or a group who started and they don't have access to the coins anymore. But there is no proof. I can't prove it. I cannot prove the opposite. In cryptography, you cannot prove you do not have access. You can only prove you have access. In cryptography, you cannot prove you do not have access. You can only prove your access. I get that. So in that case, it's impossible to prove that no one has ever had access to the coins anymore. There will be a there will always be a mystery, this black swan, this dark night of people that I talked about in other videos, and now it's actually being talked about on YouTube, finally. This person or group is personally mined possibly 1 to 2 million Bitcoins. That's a large amount. If you look today, if someone was to buy 10 to 15,000 Bitcoins, oh my God, the price bumps 5 to 10%. If someone sells 15 to 20,000 Bitcoins, the price drops 15 to 20%. That's a big one. Imagine what a million, 1.5 Bitcoins could do. Whenever people spread rumors about moving their Satoshi coins, the market dips. Just imagine of it actually happening. Sorry. To me, this is the most uncalculable risk. COINBASE is right on their filing. The most profitable, but not as massive transaction and regulation on cryptography. So that's the end of the video. It's 40 minutes long, but I'll try, maybe I'll make another video, I don't know. But this is very important. I can't tell you, like, there's a lot of stuff up in the air, but the main picture is, if you don't know much about it, cryptocurrency, Bitcoin is the safest route. If you feel like you know a lot about cryptocurrency and you can, you know, figure out how to finagle money on the side, day trade cryptocurrency is difficult, then you know, go for it. But if you don't know what you're doing, like, don't do that. Don't get into Ethereum. I'm not gonna, like, you know, I'm a beginner at this, and I do have a piece of Ethereum, but I'm gonna get rid of it. Is this too volatile? You know, it's just such a slow grower. There's too many other positive things about Bitcoin specifically that make me feel like that's where the flow should go, because of what I said and what you can see in the link I will make in the video. It'll be attached, so you can get a better idea about what I tried to say in 43 minutes, in 28 minutes. I love you guys. You reach me at TuckNuts. You're probably not watching. No one's watching right now, but if you are, at TuckerMLO on Instagram, and TuckNuts on YouTube, and my blog is #TucksBlog. Love you guys. Thank you for your love and support.